Hi, I'm Claudine Cohen, Managing Partner of CohnReznick's Value 360 Advisory Group. Welcome to today's episode of Dealmakers Unplugged. With me today is Erica Hyland, Senior Managing Director at Gladstone Investment Company. Erica, welcome. Glad to have you here today. Maybe you can just kick it off and give us a little bit of background about you and Gladstone.
Absolutely. Claudine, thank you very much for having me on the podcast today. I'm honored to be part of this. I have been at Gladstone for over 20 years. Gladstone Investment Corporation is one of four publicly traded funds that we manage under the Gladstone umbrella. Our fund is traded on the NASDAQ under the ticker GAIN, GAIN, and we're a publicly traded business development company. I've been a senior managing director here for quite some time, and I'm looking forward to taking on the role of president of the fund starting in October alongside some of my long term colleagues here. As I mentioned, we're a publicly traded business development company, which most BDCs invest in credit securities of privately held businesses. And while that is part of our model, we also think of ourselves as effectively a buyout fund, leading with our equity investments, where we are also investing both debt and equity in all of our portfolio companies, lower middle market companies, those who can sustain a moderate leverage profile, along with some growth that will lead to capital gains on our equity investments. Most of the portfolio companies are in the lower middle market. Think, say, 5 to 15 million of EBITDA across a variety of industries, including manufacturing and industrial, consumer products, and other business services.
So you said 20 years at Gladstone, which is a long time. I thought I'm going into 12 and a half years at CohnReznick. I just have one question on that. Have you ever interviewed a Gen Z, maybe a millennial, who's asked you like, wow, that's a lifetime, and what keeps you at the company so long?
It happens more and more frequently these days, and I've finally gotten to the point where I can be comfortable saying I'm 20 years into it, because it was a little bit hard to acknowledge for some time there.
Of course.
But I will say what has kept me at Gladstone, and I think part of what we'll talk about today is that being long-term investors is part of our business model, but it's also how I like to think about our opportunities. So we take very long-term partnerships with our portfolio companies, getting very deep into the industries in which they operate, building good relationships with the management teams, and thinking about how to grow the businesses strategically, both through organic growth and through acquisitions. And so, that long-term philosophy really meshes well with my personal investing interest. And so there's really nice alignment there between, what I like to do and what our objectives of our funds are.
Yeah, and by the way, congratulations on the appointment as president. That's
Thank you
fantastic.
very much. Thank you.
Very nice. So, Erica, as we think about just the independent sponsor ecosystem, and we're not going to spend time discussing if we're justifying independent sponsors and how many there are and that, because we know that to be the case. But maybe just a little bit about what differentiates you in terms of how you look to work with independent sponsors, because it's not a matter of any independent sponsor showing up in Gladstone writing a check.
That's right. Yes. Independent sponsors have been part of our model from almost the beginning of our fund, even long before there was a dedicated community and even the title of independent sponsor. So, as you note, the independent sponsors are here to stay, and it's definitely part of the ecosystem that I think is frankly a big advantage to our fund, both in terms of our deal flow and marketing, but also in terms of how we manage our investments going forward. So, with respect to deal flow, we we're a relatively small team, and manage a fairly large portfolio, both in terms of investment size and number of investments. And so, we think about independent sponsors as an extension of our own marketing arm, where we are able to identify investment opportunities that are perhaps not as broadly marketed, or that we wouldn't simply be seeing on our own if they didn't come to us through independent sponsors. Secondly, and again, as we've discussed, independent sponsors can look very different. So it could be an individual with an opportunity, or it could be, a fairly well-established fund, perhaps that has even raised capital in the past that's now investing on a deal-by-deal basis. So that long-term track record, deep industry experience, perhaps even in verticals that we have not invested in ourselves directly, and ability to source transactions that we wouldn't find on our own. Those are all the criteria that makes the independent sponsor model particularly attractive to us.
And I believe in the past we've maybe touched on it in some of our conversations, but it does happen time to time that, I mean, you're investing on your own. So obviously you're not a dedicated independent sponsor fund. I mean, you're doing, in fact, the majority of your investments are direct. But when you've had situations that you've seen a deal, you might have passed on it for some reason, and then the independent sponsor comes knocking at your door a couple of months later with the same deal. Have you ever revisited a deal based on that and landed up investing? How do you view that?
Yes, in fact, that's actually happened a couple of times, um, where, again, most of the time we are sourcing transactions on our own and investing directly. And you say a majority, which is true. Probably about 60% of our deals we are investing directly without an independent sponsor involved, and building out our own network of other advisors and experts to help us manage those companies going forward. But for that remaining 40%, again, the majority of those are probably deals that we wouldn't have seen otherwise. But there has been, a couple of examples of transactions that have come across our desk and we passed for one reason or another. But when an independent sponsor has brought them back to us, typically they are bringing it with a point of view on the sector or the trajectory of the business. Perhaps they're bringing it back to us with an operator, and or a management team that we wouldn't have been able to source on our own. And those are the factors that, again, with that partnership there, along with our capital, and approach to investing longer term, that could be a really nice uh, uh, addition of resources to make a deal happen.
Yeah, and just thinking a little bit and just moving to the capital structure and how Gladstone operates, and would love for you to talk a little bit about that. Which, I mean, I think more and more we're seeing some funds that are investing across the whole capital structure, all of those things. But there is a differentiator for you because you're a BDC, and it's that evergreen capital. Maybe you can touch a little bit on that.
Exactly. Yes. So as a BDC, it's a publicly traded fund. So therefore, our source of capital comes from raising equity in the public markets, along with credit that we may borrow against that equity, whether through a line of credit or permanent debt financings. So we have a permanent capital structure, which then enables us to invest in smaller, illiquid private companies. And unlike the traditional private equity funds who are on a say, 10-year investment cycle, where they have to show their investors liquidity in the current fund in order to go out and raise the next one, we simply don't have those kind of timing pressures. And while our investors, of course, want us to demonstrate our ability to both generate regular ongoing distributions, which mostly come from the debt piece of our investment that we invest, they also expect that we'll generate capital gains. So, of course, we do seek to have liquidity in our portfolio companies from time to time, but we can be extremely flexible as to when that happens, whether that's because of a particular industry event or because of the needs of a management team. We really think thoughtfully about when is the appropriate time to maximize the value of our equity. And in some cases, some of these businesses that we've invested in tend to be extremely long term, where we've owned some of them for more than 10 years, and we've been able to recapitalize them, support growth in different ways, build on through M&A. And there's a really good place in our portfolio for those type of evergreen businesses that just generate solid cash flow, because it helps support our ongoing distribution obligations to our shareholders.
And maybe you've got a couple of examples you can touch on, specific industry examples.
Yeah, yeah. So, of the things we've talked about today, I'd say on the evergreen side, one example I can share with you is a business called Old World Christmas, which is actually a Christmas ornament business. And we have been invested in that business for approximately 12 years. It started off quite small, acquired it from a founder, and brought in a management team to support the growth there. That business has grown tremendously since the time of our investment, but the market for transacting there perhaps has not been the most favorable with the supply chain, tariffs, et cetera. But it's a very strong business. It's performed exceedingly well. It's a terrific team. And so it has a really nice place in our portfolio. And we expect to continue to support that business for many years to come. Another example, which is less on the evergreen side, but more goes towards the way we like to work with independent sponsors. We actually have 3 companies in our portfolio today with which we've partnered with the same independent sponsor. And one, it's terrific to have repeat partnerships because clearly there's alignment of interest there. But just as important, those 3 businesses are in and around the energy sector, which is, an industry that we've generally shied away from, given its potential cyclicality. And frankly, we just haven't had a lot of deep industry experience on our own internally here. So, when we partnered with the independent sponsor, that group was able to bring along a set of very experienced operators, CEOs, and common experience that has resulted in tremendous performance and again, continued additional transactions on a repeat basis. So, that's one of those examples of a really nice combination of industry experience, strong operators, and then our flexible and complete capital, being able to provide all the debt and equity to provide at the time of a transaction to facilitate closing in a pretty straightforward process.
Got it. I mean, a lot of this boils down to the discussion. I mean, your tenure at Gladstone, your investment horizon, the timeline, what it can be, and then the example you gave on the independent sponsor on how important relationships are in all of this, and how much of it is a relationship business.
That's what it all boils down to across every aspect, from transaction sourcing, support on the due diligence side. We've had a long-term partnership with CohnReznick on that front, to working with the portfolio companies, the management teams, the other stakeholders in the business. It very much boils down to relationships, commonality of expectations, and working together and being straightforward and truthful with respect to where the business is going. It's not always a straight line. So how do you work through those challenges? And again, having that flexible evergreen capital structure allows us to work through challenging times when those inevitably occur.
Great. Well, Erica, thank you so much. This has been really insightful. Anything that you want to say in closing?
Well, Claudine, thank you again for the opportunity here. And all I'll say in closing is we look forward to continuing to generate great returns for our shareholders and trying to build out our portfolio of strong businesses. So look forward to continuing to support the growth here.